A decade ago, I've been carefully monitoring what Elon Musk was doing with the incredible SpaceX. It became very clear to me that was leading to a multi-decade disruption in the market. That inspired me to set up the world's first space-focused investment fund.
Space tech is almost like the invisible backbone of the world economy in a lot of ways.
We are in a period where we're building up this large constellation of satellites around planet Earth. What this is developing is a digital infrastructure around planet Earth, and we liken that to a new internet.
Do you think that space tech can actively create a healthier and resilient planet?
I believe that space is a capability for good. This new capability is going to generate trillions of dollars of value. Will equally be applicable to every single vertical you can think of. And the big trends that everyone's interested in: defense, climate and sustainability, autonomous mobility, smart cities. We're now able to monitor our planet in a more efficient way. Understanding how the planet's working, who on the planet is responsible for emissions, knowing and being able to measure it fairly and effectively means that you can then use that data to affect change. Hi there, I'm Mark Boggett, CEO and co-founder at Seraphim Space, and you're listening to the Innovation Civilization podcast.
This is the Innovation Civilization podcast, and my name is Wahid. Today, we'll talk about the space tech economy and why is it so important for our civilization in the years to come. Stay tuned. All right, Mark, welcome to the Innovation Civilization podcast. What a great pleasure to have you here today.
Thank you for inviting me. I'm looking forward to our conversation.
Brilliant. So, Mark, let's kick things off. Do you want to tell us a little bit more about yourself, really, and how you got into the kind of space tech?
Yeah, sure. Happy to do so. So I'm a career technology investor. So I've spent my entire career investing into new technology since the 1990s. I moved into venture in the year 2000. And I've been there ever since. A decade ago, I've been carefully monitoring what Elon Musk was doing with the incredible SpaceX. And it became very clear to me that that was leading to a multi-decade disruption in the market. And that inspired me to set up the world's first space-focused investment fund, which I did in 2016.
Right. That's incredible. When you say the world's first, you mean the other funds were not thesis driven in space per se, and this is the first one, or
there were no other funds at the time. Much to my surprise, when I started looking into this, that were exclusively focused on the theme of space. So there were other funds that were investing from generalist tech or deep tech funds, but not specializing. So and really to sort of help us become that specialist. We brought in LPs from the space sector. So the LPs in our first fund were some of the world's largest space corporates, companies like SES and Telespazio and Teledyne, Surrey Satellites. And these companies recognized that the space industry was going to be going through a period of disruption. And they wanted to be an LP in a fund like mine to provide them with sort of horizon scanning of the new technologies and business models that were really going to make those changes.
So would you say that the LPs need to have a certain kind of thesis as well, or a certain, let's say, investment appetite for space tech compared to, say, software and other things? That's why you need special LPs for this,
so that was certainly the case 8 years ago when we set up our first fund. The investors were largely corporate investors that had that from the space market and sovereign wealth funds, who really understood the important implications of the revolution that was going on in space. That is changing slowly over time. And if you look at we also have our growth fund is listed on the London stock market. So that has a range of wealth fund managers in there that have got sort of a long-term investment horizon. And then we also have another private fund. And again, we have more space corporates. So most recently, Eutelsat and JSAT, Asia's largest satellite operator, participated in that fund. So space is becoming more mainstream. And as that's happening, there's a broader appetite from investors to get specific exposure through a dedicated fund like ours, rather than taking an exposure through a more generalist deep tech fund.
That's quite interesting, basically. And so did you say that you guys just closed Fund 2, isn't it? Or
it's our third fund, but it's our second venture fund. Yeah. So our first venture fund that we launched in 2016, we invested into 20 companies and we've now IPO'd and sold all of those companies. We, the same team with the same strategy, we've just launched our venture fund too, which is a $100 million fund focused on exactly the same global market opportunity.
That's amazing. And is this through pre-seed to Series A, or where do you guys play?
So this fund is focused on seed and Series A. But let me sort of help put that in the context of the broader organization of Seraphim. There's three parts to Seraphim, and they're all focused on space. We have a accelerator program, which we launched in 2016, 2017. And that focuses on pre-seed and seed stage global space tech companies. We take 10 companies at a time to go onto that program. These are all drawn from our global deal flow. And then we help those companies become investment ready. Most of the entrepreneurs are engineers. They don't know how best to sort of position their company and really speak in the language of investors. We help them with that. They get their pitch deck ready. We then introduce them to 300 plus of our VC friends from around the world who syndicate and invest. So that really creates we're on our 13th accelerator now. It's become the largest space accelerator in the world, and it's been very successful. More than 80% of the companies that go through the program successfully raise their seed funding. And we've had 120 VCs invest $350 million into the cohort so far and counting. So the 13th cohort is sort of underway at the moment. So we do that from London for Europe. We do it from San Francisco for the US. And last year we did that from Singapore for Asia. So that's our focus on the very early stage. So we get sort of university spinouts going onto that program and pre-seed entrepreneurs that haven't even yet set up their companies, who are sort of thinking about that and working out how they engage with the market. We've then got the venture fund that focuses on seed and Series A. So we cherry pick and invest into the companies that are coming through that accelerator. That accounts for about a third of the investments that we make through that fund. And then the rest more comes through our sort of global deal flow. And then, as I mentioned, we've also got a growth fund focused on space, which is listed on the London stock market, called the Seraphim Space Investment Trust, PLC. That invests into B rounds and C rounds and D rounds and E rounds of space companies. So across those three different parts of our organization, we've built a portfolio today at 126 space tech companies. So we're the most active investor globally, the most prolific investor in this market. And that perpetuates the deal flow that we get to see, giant global deal flow that really is the lifeblood of our organization.
That's amazing. And for your kind of, I guess, your seed to Series A, are you leading these rounds, or?
So no, not necessarily. We actually like to follow because it allows us to take a corner of a round, get to know the management team, how coachable they are, how good they are at hiring people and retaining people, how good they are at hitting their own technical and commercial plans. And then our strategy more is then to sort of double down at A. So that's really our strategy. Saying that, we probably end up leading about half of the rounds that we invest into. And even when we're not leading, we would typically, as the space specialist, be the party that sort of sets the terms for the round and sort of takes the sort of lead activity on the due diligence, but we're not necessarily putting in the largest check.
That makes sense, really. And I mean, we were talking about it yesterday, and you were mentioning about how I think your last fund returned 3x to your LPs, right? Which is a tremendous outcome in hard tech. And we'll talk about some of the kind of challenges. But I was wondering, like, do you have a sort of like investment criteria you look at? I mean, except for being a space tech company, like what are some of the key stuff that you guys look at that, other funds don't, and you guys bring in value add as well as a result of that?
Yeah. So it's about people, really, when it comes down to it. So let me just sort of provide a little bit more color to that. So we've got this privileged position being a specialist investor and actually being the most active specialist investor globally, which means we get to see this giant global deal flow. So to put that into perspective, this is 50 to 100 space-related investment opportunities every month. And we've consistently been, we've consistently been seeing that for really the last decade, and the number of companies growing each quarter. So what that has provided us with is a sort of an institutional memory of the companies that we've seen on that journey. So what we know what we're looking for. We've got our own thesis around different parts of the space ecosystem, the markets in which we want to play. And we've got a thorough knowledge of the companies that have already gone through that we've passed on previously for various reasons. So when we see a company that's got a great team that are doing something in an area that we're interested in, that's really when we really take notice. And then we really try and get to know the team. And this was the reason why we set up the accelerator program, really, because it was an opportunity for us to engage with each accelerator as a 3-month program. So it enables us to be able to engage with the founding team over an extended period of time. And what that enables us to be able to do is really get to know the entrepreneur under a range of conditions. They're great actors. You know, they'll say whatever you want them to access the capital. They'll be the person that they think you want them to be. But it's very difficult to keep up an act over a 3-month period of time. So the mask drops and you get to see the real entrepreneurs. And furthermore, by only taking perhaps a small caller over initial round and just sitting back and then evaluating the entrepreneurs over a more extended period of time, that allows us to really build up conviction. And we're a conviction investor. So once we've got conviction, we're then doubling down and we're really building up our stake. And we're then really sort of throwing ourselves into supporting the companies. So you talked about value add. You know, the type of things that we can do, of course, is that, you know, we've got 10 plus of the world's largest space corporates as LPs. So our ability to be able to reach into their business units to help with due diligence is tremendous. But we can also engage with them to form partnerships with the companies that we're investing into. So that kind of relationship really adds a lot of value. I'm sure we're going to come on and talk about later about defense and climate being some of the key driving trends for the sector. We because we've been focused on this area for a long time, we've built tremendous relationships around the world in those important markets. So we're able to offer those. But really where we offer the most value is really joining the boards of the companies that we invest into and helping them with the simple things like, you know, how do you go about hiring a best-in-class finance director? You know, it's really important, these first C-suite hires that you bring on board. How does a new entrepreneur know what good looks like? So we spend a lot of time helping these companies, and we sit on the selection panels when these C-suite hires are being made to try and help them avoid making mistakes, particularly with these first hires. And it gives them confidence. It's also a great thing when you're trying to hire great people into companies, if you've got your board members and your VCs being part of that process.
Yeah, that makes sense, really. So, like, zooming out a little bit, so one question I've always been contemplating for the last year or so, and perhaps you have been contemplating far longer than me, that it's great to see these accelerators come in and a lot of innovations happening in space in the 21st century. However, it was not like this throughout the 20th century. You know, like the first Apollo moon landing was 1969. Since then, it's been quite dead, right? I mean, space was all about government. So what changed basically, and why is this a great time to invest in space?
So you're absolutely right with everything you said there about this sort of dead period for space. And it's all about government, but also during that period, you saw the sort of rise of the traditional SATCOM player. And really what happened over a period of time is if you think about SATCOM as an example, they are buying satellites that cost hundreds of millions of dollars that need to operate for a 10-year period in order to pay back that cost. And they're financed by debt. So what happens is that the entire space industry became very risk averse, because every time you introduce a new innovation, a new piece of software, a new piece of hardware, a new rivet, it presents a whole system risk. Just because you've introduced that new piece of equipment, it could mean that the entire satellite doesn't work. So rather than embracing new technologies, what the industry did for the last 20 years or so was did the exact opposite. They prized technologies and solutions that had the longest heritage in space, and they were willing to forego latest technology innovations in order to get that confidence that the satellites would work for an extended period of time. So what changed was really Elon coming into this market. He wanted to procure a launch, a rocket. And when he discovered how much it cost, he couldn't quite believe it because the math didn't add up. He kind of said, look, I could build one myself for a fraction of that. And that's exactly what he did. But when he went to do that, he started off with a clean sheet of paper. So he didn't look at how rockets are traditionally made and, what are the best components to use with the most space heritage so that they're going to work. He started from a clean sheet. So using 3D printed everything and using components from other adjacent industries, whatever he could do to bring the price down. But he also started from a different perspective, which was around reusability, which of course makes sense in driving down costs. If you liken it to the airline industry, if you're going to take your family on holiday, and they're going to then throw away the plane after you've arrived and buy you a new one for your return journey, that's going to make for an expensive holiday. And the same thing was happening in space. So the reusability has really brought about a game change in the cost of sending anything to space. So to put it into perspective, a decade ago, it cost over $80,000 per kilo to send anything into space. And that's now down at about $1,000 per kilo today, thanks to SpaceX. So, and it's not just about the cost, it's also about the cadence. So there's almost a launch a day now. So not only has the cost come down, the availability to be able to access this has increased by an order of magnitude. And that revolution has then itself led to a revolution in the satellite industry, because entrepreneurs have been looking at space now that it's become accessible, and asking themselves the question, is this market that I can play in? And if so, how am I going to do that? And they then set about building satellites again, using the sort of same methodology as Elon, trying to identify components from adjacent industries, bolting them together as cheaply as possible. And incredibly, these smaller, lighter, cheaper satellites that are often the size of a shoebox, the size of a small fridge or a microwave, they're only costing a few $100,000 to a few $1 million, but they've often got better capability than the traditional satellites that would have cost hundreds of millions or even billions of dollars. So those two things brought together means that you can put up much larger constellations, and that's really where the game changer is. It was really that, and the prospect of what these constellations could do, that brought me into the industry, and as a sort of backer of these new innovative space companies.
And like you mentioned satellites and satellite comms there. I think for a lot of listeners, this is kind of hard to kind of grasp their head around. I mean, as I was sort of reading about this topic, is that space tech is almost like the invisible backbone of the world economy, right? In a lot of ways, right? So can you explain a little bit more of why space tech and things like SATCOM and others are so important for our civilization?
Yeah. So, well, let's start off with where we are today. GPS.
Yeah.
So over the course of the last 30 years, GPS has really become part of our everyday life. And it's not just us as consumers, it's also every single business you can think of. GPS is involved with every stock transaction. Every time you take money out of an ATM, the live maps that we now have in our phones that are part of our utility of everyday life, helping us throughout the day. This is all really just slowly being adopted by businesses, but there really isn't any sectors that haven't embraced that capability. So I've got the figures here from a sort of UK perspective, but you'll see that this is pretty much mirrored around the world. But satellite capability underpins nearly 18% of GDP in the UK. If you turn the satellites off for a 1 week period, that would be a economic hit of £7 billion to the UK market. This is how important satellites have become. And this is where we are today. Now, the areas that I'm investing into are the satellites of tomorrow. And I'll come on and explain how that's changing. But let me give you a sort of a portfolio company example, if I may, to talk about how this is changing. So one of our portfolio companies is a Finnish company called iSci, and they have developed a miniaturized satellite. And on board that satellite, they have a miniaturized radar sensor. And what this radar sensor allows them to be able to do from space is to look down at planet Earth and gather information in very high resolution, 50 centimeter resolution. But the key thing is that by using radar, they can look at the ground and see the ground under all conditions. That means day or night, and it means regardless of the weather. So it can reliably look at the ground. So with their portfolio of satellites, their constellation of satellites today, it's 34 satellites, iSci are able to see every square meter of Earth every 2 hours under all conditions, 24/7. And what they then do is they gather that data, they apply algorithms and artificial intelligence to make sense of that data. What happened on that square meter of Earth 2 hours ago, 4 hours ago, a day ago, a week ago, a month ago, a year ago? And this presents a very rich picture that has really never been available before. And they're looking to build out their constellation beyond its 34 today. You know, during the next year, they'll move from 2 hours down to 1 hour, and then down to minutes, and then down to effectively real time. So again, to put this back into sort of the analogy of that I was making around GPS. GPS is this blue dot in your mobile phone. Yeah, but it's got 3 pieces of information: longitude, latitude, and time. And yet it's generated billions of dollars of enterprise value per year, and we all rely on it as a key utility every day. The green dot that is going to be in your mobile phone as a consequence of the types of companies like iSci that we're investing into has hundreds of pieces of information about that spot on Earth that you're interested in and how that's changed over time. So where GPS has generated tens of billions of dollars of value, we consider that this new capability is going to generate trillions of dollars of value and will equally be applicable to every single vertical you can think of. And the big trends that everyone's interested in: defense, climate and sustainability, autonomous mobility, smart cities, all of these sort of big trends that are already underway are going to be accelerated by this capability from this from satellites. And where I've used the example here for iSci with a radar sensor, you can put a whole range of different types of sensors onto these satellites that each of them gives a different superpower in very high resolution. And because the satellite constellations are so large, it brings the data capability close to real time. And as you move closer to real time, there's more value in that data set.
That's interesting. And, you know, in terms of just the example you gave of iSci, so you mentioned that it takes pictures, real-time pictures every 2 hours,
Yes.
right? Or
Yes.
like videos. But is it, I mean, I understand that, and I can see why that's sort of useful for plenty of use cases, like you mentioned, climate, defense, if you're in a war, like especially in, say, Ukraine war, and you want to see, you know, where the enemy lines are and stuff like that. You know, it can help sort of Ukraine that way. Maritime, you know, where your ships are and stuff like that might be quite useful. But how many companies can there be which basically takes pictures with satellites? I mean, surely it's one feed, maybe just one company, and you take pictures and you just put it out there basically for different industries. So do we need like hundreds of companies just taking pictures of satellites, or is there something that I'm missing here, you know?
So this is a very large addressable market, because every single industry can use this data set from space. So it's very unlikely that we're going to end up with a single company Much as I would like it to be a single company that I was invested into that owned this market. No, it's because it's a large addressable market that brings in competition, and customers don't like just having the choice of one. Who tends to sort of then start to exert monopoly power and monopoly pricing and poor performance and poor customer service and so on. So there is a need for competition. But is there going to be 100 companies providing radar data capability from space? No. Is there going to be sort of 4 or 5? Yes, there is. And but the market for these companies is measured in many billions. So there is plenty of room for competition in this market, and each of them sort of takes a slightly different approach to how they do it. Some of them will have higher resolution, some of them will see broader areas, some of them will focus around cost, some of them will focus around time. So it depends what the particular customer requires. But this is absolutely huge. Let me put it into another context for you. So think about Google. What does Google do? Well, Google is a search engine. You type in your search requirement. It then goes out across the internet, finds the information that you're looking for, brings it back, and then ranks it in the order and tries to make it as accurate as possible. And Google's the leader because it does it quickly and efficiently and accurately. But it doesn't own any of the data that it goes to collect. Whereas a portfolio company like iSci, that's been historically gathering information about every square meter of planet Earth, if you wanted to know what went on, outside of your front door of your house a week ago, and you type that into their search engine, they will go away. They'll find that information. They'll bring that information back to you, and that's highly valuable information. But they own that information. And if you can imagine all of the different use cases for consumer and business and government that might want to call on that sort of search engine to understand what happened around our planet at certain times, and they're serving it up in a similar way to a search engine, you can imagine how valuable that could become over time.
Yeah. I was just, as you were saying that, basically, example, something came to mind. How about like privacy issues related to data? So I don't want any satellite showing what's happening in my backyard. Sure. It's basically my real estate. So how do your portfolio companies square that circle, basically?
So regulation is challenging. Full stop. So in the US, for example, radar data. You're not allowed to sell radar data in the US market unless you've got a license to do so. And this is the way that the US look to control that. But at the same time, they can't control the global market. So if you wanted detail about radar data over the US, you can just go and buy it in Germany, or you can buy it in France, or you can go and buy it in Italy, or wherever you want, just not in the US, unless you want to buy it from a sort of licensed vendor. So it's very difficult for governments to really control that. But taking a step back, regulation is a challenge. If you think about closer to home, social media that knows everything there is to know about the people involved. For the last 20 years, they've been trying to regulate unsuccessfully Facebook and other social media players, and that has immense information about individuals and about their entire life. Whereas from space, it's more anonymous, and I believe that it's going to take 20 years plus for regulators to really find an effective way to really provide the data security that really is required. It's just going to take a long time for that to be put into place. So it's not something that really features very heavily when we're thinking about these businesses. Of course, we're only investing into businesses that are good actors, and they're working in countries that are non-sanctioned and effectively doing everything in a legal way. But regulation is very much behind the curve and is expected to be for quite some time.
Yeah, that makes sense. And regulation always takes its time to follow up, and you don't want regulation too fast, right? That's gonna stifle innovation quite a bit. So, Mark, if you were to how do you, in your mind, segment or just kind of segregate the industry basically? Like, is it satellite, non-satellite, and then a few other things, launch, non-launch, or like, how does it sort of, when you say space tech, like, what does it actually look like?
So we think about it in sort of three ways, and it's really sort of three time periods. The sort of where we are right now is which we call Space 2.0. We are in a period where we're building up this large constellation of satellites around planet Earth. So today, SpaceX has got 5,000 satellites. There's about 9 or 10,000 live satellites around planet Earth at the moment, and there is the potential for hundreds of thousands of more to be put up during the course of the next handful of years. And what this is developing is what we consider to be a digital infrastructure around planet Earth, and we liken that to a new internet. So we are so that's our first description of what we're investing into. So does it relate to the digital infrastructure? That's then each of these satellites is either providing communication capability or it's monitoring our planet in a high resolution way using a myriad of different sensors that give us data set that we've never had before. That data then allows us to be able to use resources more efficiently. So think about agriculture and things like, say, the use of water, being more efficient with water or pesticides, for example. But it also allows us to be able to catch bad actors that are doing bad things. So illegal fishing, a $56 billion a year market that will be eradicated during the course of the next 5 years, because there's now a data set on everything that's going on in every ocean in close to real time. There is nowhere to hide for these illegal operations, and they are being shut down already using this data set that's available. So that's what we call the digital infrastructure, and this is where we are sort of mostly focused at the moment. So it's everything to do with that. So it's the launch and all of the data analytics and all of the data transportation. And that's really one way that we describe space. And that's the opportunity of today. The opportunity of tomorrow, and tomorrow is sort of measured within the next 5 years or so, is more about building physical infrastructure in space. So this requires the cost of sending kilos into space to continue to fall. And SpaceX have got their new Starship launch vehicle that is due to come to market this year. That's going to considerably reduce that cost even further and increase capability. But this is about building big things in space. So data centers in space, cell towers in space, lifting dirty industries from planet Earth and moving them into space so that we don't pollute our own planet. And then there's a whole new exciting areas of manufacturing in space. So particularly things like biopharma in space. We've learned over the last 20 years on the International Space Station, on experiments that have been done on the space station, that zero gravity effectively provides a fourth dimension. Every protein, every molecule behaves differently in a zero gravity environment. And there's an expectation that this is going to lead to some breakthroughs in biopharma and medicine and all of these areas. And adjacent to that, new materials and how to develop stronger materials or materials that are easier to decompose, for example. So this kind of infrastructure in space is now at its earliest stage. So the companies that are seeking to build this kind of capability today are sort of seed stage and A stage companies, they're sort of 3, 4, 5 years away from really being able to sort of scale up that activity. So that's what we call Space 3.0. And then Space 4.0 is a little bit further out. This is more sort of during the course of the next decade. It's the moon as a stepping stone for Mars. It's about permanent habitation off planet and all of the technologies that are needed to develop that. It's about space colonies and the extraction of resources. That's very much sort of much further out. And so this is how we classify the three different types of space companies that approach us. Those are the three buckets that we effectively put these businesses into to determine, what we do next with them.
Yeah, that's pretty interesting, really. And in the case of actually the space tech companies that are there, it's quite novel technology. It seems like, that's why it's basically called hard tech. Are there any interesting, innovative business models that you're also seeing within the space tech space? And what I mean by that is, I think there is a bit of like a business model fatigue, at least in the kind of traditional VC software world, that it's either like a subscription, or like, per seat basis and stuff like that. Are there anything interesting that you're seeing, which is like a very innovative, like business model per se?
So I wouldn't say really it's the sort of business model led change here. Ultimately the customers are business terrestrial customers that still want to buy their capability in the same way. And as you move away from that, you do so at your peril, because companies get into a way of buying it. So for example, the sort of data that is being generated in space, new ways of looking at the planet with new sensor capability and new sort of timeframes. Typically, that's being acquired and used by the customer in a SaaS-based type of payment structure. So this is just new data that is then being brought into their operational systems. We want to make it as easy and as usual for them to buy it as if they're buying any other kind of terrestrial data. So it's not really about business models. It's just new. It's about new capabilities that that simply have not been available previously, and space is really the only way to sort of deliver these type of capabilities.
Fair. That makes sense, really. In terms of use cases, and I just want to pick out a few more. So space tourism was a big deal, like at least, in the media and stuff like that, right? In Virgin Galactic or whoever was actually trying to do it. It never really took off yet. Do you think it's just a matter of time, or so what's happening there?
Well, not a lot really is your right summation of where we're at the moment. It's super interesting, but there are just so many more bigger commercial opportunities in the space market that are easier to monetize and higher impact. This is not a market that we see of any real size. It's not an area we've invested into, because it's a tremendously expensive service to offer to a very small audience that can afford it. I think the most successful player in this market right now is a company called Axiom, and they are one of the three leading companies that are looking to privately build a new space station, because the International Space Station is being decommissioned at the end of the decade. And one of the things that they're doing right now is that they are offering services to governments and to space agencies around the world, where they will privately enable satellites from different countries. Not satellites. They will allow astronauts from different countries the ability to be able to go into space or to access the International Space Station. So they're making a really nice business from that at the moment, but it's really done at the sort of national level, and governments like the UAE and the UK, they're buying, 3 or 4 places on a launch to go to the ISS. We've still got a couple of companies that are doing, actively working on space tourism, Virgin Galactic and Blue Origin. And in fact, one of the guys that is on our investment committee has went up with Blue Origin and has been into space. So I know a couple of people now that have privately gone into space, but it's not an area for us to be investing into. There's just so much more lower hanging fruit, so it's not really a sort of central feature of the space investment market.
Yeah, that makes sense, really. So we talked about the use cases of satellites and sensors and taking pictures and stuff. And we talked about some of the other stuff as well. Are there any other interesting use cases within your portfolio companies or outside of it that you're seeing right now?
Yeah, so I could speak for the rest of the day on this one. Let me let me just give you a couple.
The top two.
We've got 126 portfolio companies. We think they're all great. Let me give you two. One is actually just in the news yesterday, called Hubble Networks. They have just launched their first two satellites, and they've just made a big media splash because they've switched them on and they work. And what they're able to do is they're able to connect to Bluetooth from space. So I don't know about you, I can't make Bluetooth work across my living room. What they announced yesterday is that they have successfully connected from their satellite to Bluetooth devices on the ground 600 kilometers below. Now, why? Who cares? Why does that matter? Why that matters is Bluetooth is a very low cost and ubiquitously available component. It's tiny, and with a watch battery, you can make a Bluetooth component work for up to a decade. So that means that anybody or any industry can incorporate Bluetooth into a device or a product, commercial or industrial, that can then be tracked from space. So let me give you a sort of simple example. Ray-Ban sunglasses. You can put a Bluetooth into the arm of your sunglasses, and when you buy your Ray-Ban sunglasses, they'll ask you whether you want to pay $4 a month to have a location-based service in the case that you lose them. Now that's $4 a month to Ray-Ban that they've never had before. So every pair of sunglasses, they get 3 years of additional revenue stream that they've never had before. To the consumer, it means that they inevitably lose their sunglasses, but now they can find out where they've left them. And that's a really, really valuable service that's value add to everybody involved. And there are billions of devices available now. Think about these little devices like tiles, where you could use to sort of find out where your keys were. Now you can find out where your keys are using a sort of tile device, because they're now able to retrospectively operate with those type of products. So the IoT from space has the potential to be absolutely huge. Following your pets, following cattle, following pallets around the world, following consumer devices. If you think about the sort of drone economy, Amazon dropping off goods in your back garden that you've just delivered, any goods that cost more than $10, they could easily put a Bluetooth device on there so that they can demonstrate that product was dropped into your back garden at your back door, so that they can evidence that it's been actually delivered to you and is now in your possession. So that's one example of a major technology breakthrough that really has the ability to be able to significantly change the world and make a lot of money in doing so. So there's one. Then another investment that we've just closed is into a company called Skylo, and what they do is they are a software company that have that enable the ability to connect satellites to your mobile phone. So in the second half of this year, there is a new chip that is being built into virtually all new mobile phones. And for those of your listeners that have got an Apple iPhone 15, they would have noted that this chip was included in that phone last year. Apple enable you just to, when you're outside of any cell tower range, you can still connect to a satellite in the event that you've got an SOS message. What Skylo enable any Android phone is to be able to make text messages when you're outside of the cell tower coverage. So you're sat on an aeroplane, you're sat anywhere on your boat in the ocean, and you're anywhere in any region, you're going to be able to send text messages, and next of all, they'll do WhatsApps. Now, because these are connecting to the traditional geostationary satellites, because of the there's an inherent delay because of the distance, it won't work for voice, but it's really going to open up new forms of communication because all of us know that we're frequently stopped from being able to communicate because we're outside of range. So this is a company that's really going to make a big splash in the second half of this year. And, another example of how, this kind of new capability is going to filter into our everyday life.
That's incredible. That's incredible. And yeah, I mean, for me, what's exciting is basically it feels like a very kind of crucible moment for a lot of these technologies actually changing the way we live. It is. Right.
It's going to happen. It's going to happen quickly, but no one's going to sort of really notice it. In the same way that you didn't really notice how reliant you were becoming on GPS for your daily existence.
Exactly. And all the applications that are basically powered by it, right? I mean, like you wouldn't have Uber without GPS, and Google Maps and stuff like that. It's just quite amazing, really. For me, I think, as I've kind of been reading through, the two main technologies that I think are at a turnaround moment right now are basically LLMs, firstly, that's happening, the revolution there, and then also the space tech stuff, that's happening. It feels like a very pre-internet, post-internet kind of juncture. Basically, right.
Well, I totally agree with you. We consider this digital infrastructure that's being built around Earth, to be the equivalent of a new internet. We think right now the companies that we're investing into are the Googles and the Amazons of the years ahead, because this is going to change society. It's going to change. It's disruptive for businesses. So any business in any company in any industry that isn't today engaging with space to determine how it's going to impact their industry are pretty much too late, because others in the industry are about to unleash new competitive things by leveraging this data set, this communication tsunami that is really going to push them ahead in competitive terms. So this is going to happen very quickly.
Yeah. So that's quite interesting. So Mark, I want to spend a little bit more time on the venture model, right? And I mean, you've been doing this for a while, generate some amazing returns for your LPs. There's always this kind of conundrum within the VC space, is that, does the venture model actually work for hard tech, basically, hardware-based tech? I've seen before a lot of kind of funds who claim that they do sort of hard tech and hard science. But if you actually look at, the split of the returns in the portfolio, all the returns are actually coming from software-based kind of investments they made versus the hardware ones, which they lost. And I think a lot of firms early on as well, like, and it can be different hard tech, like for instance, in the 2000s, basically, I think it was Khosla Ventures and others, Kleiner Perkins, who really went so hard on to climate tech investments, and saying like, we want to do hard tech, lost a lot of money, as a result of that. And I guess, amazing firms and amazingly smart people, they kind of, made back all the money somehow, and they're, landed swiftly on their feet. But so, I mean, you've been doing this for a while and you've been generating great returns from hard tech, basically, right? Versus software. So what are these sort of lessons learned that you've come across, that it just works better if you, while running hardware companies, basically, and investing in hardware companies?
Yeah, so let me unpack that through a few different ways. Yeah. So first of all, and hopefully it's been clear from the things that I've been talking about and the examples that have been given from the portfolio, we've really been very focused on the types of companies that are providing services for use cases that are needed terrestrially, which means that there is a market opportunity and customers with a need for the product that are prepared to pay for it. So we are able to demonstrate, so example, one of our portfolio companies, Satellite View, that provides infrared capability from space, looking down at buildings and being able to determine the thermal efficiency of a building. That company launched its first satellite, and then within 6 months generated $150 million of option contracts on that data set. So you can grow these businesses very, very quickly, and they're very low cost infrastructure. So space, traditionally was satellites costing hundreds of millions of dollars, launch costing tens of millions of dollars. We've moved into a new era where hardware is the sort of the basis of the opportunity, but it's low cost. But the opportunity really still is around software, and it's around in many cases it's around applying AI to a data set to provide a service that is terrestrially needed. So we've been really very focused on that. And whilst there are so many really exciting technology developments around the moon and all of the technologies that are required for permanent habitation, and I get so excited about these things, but there isn't a market for them today. So therefore, we're not investing in them, and we've demonstrated through our first venture fund that we can provide a return in the traditional 10-year venture fund timeframe. Now, so that's the first answer to that question. The second answer to that question is we have launched our growth fund in a structure that's an evergreen structure. This is why we did it and listed it on the London stock market, because it's not the 10-year traditional structure, which basically means that it's evergreen. We never actually have to return the capital to the investors. If they want their capital back, they sell their shares. So what that enables us to be able to do is take long-term positions in these companies. And, the question is, and again, I've likened the types of companies we're investing into the companies that was foundational companies at the time of the internet, the Googles and the Amazons. When was the right time to sell your holding in Google? When was the right time to sell your holding in Amazon? Well, the answer is never, or certainly not for the last 20 years or so. And this is the way that we passionately feel about space. So we actually structured our vehicle to enable us to be able to align the long-term interests of a particular hardware market with the interests of our investors. But for the venture stage investing, we still think private's best, because you don't want to be taking the level of risks and having half your portfolio fail in a public environment. That's for growth stage companies. The risk and the failure and the things that come with venture are much better done within the traditional private 10-year VC structure.
Yeah, I was I think listening to someone speak about this, but you mentioned about the hardware costs are going down, materially, like for satellites and space tech in general. I think someone was kind of mentioning how it's akin to pre-AWS, post-AWS, and so like pre-AWS, the check sizes for seed, even for software companies, was huge because you just got to have your own data centers, and the hardware was just so expensive. And then post that, I mean, you could just, put together something up and run your own kind of applications so cheaply.
The whole of space infrastructure is on its way to being commoditized, and I'm fine with that, because if I speak to if you speak to the CEOs of our portfolio companies, they don't see themselves as space companies. It's about what they do. It's about the service they offer. They see themselves as an insurance company, a climate company, a telecommunications company, a logistics company. And how do they make their money? Well, they sell a data set or a service to a customer that wants to buy it. That data set is generated from space, but that's just the means to the ends. The value that's created and how it's delivered and how the customer uses that is software, and AI has got a huge part to play in the success of this sector.
Yeah, that's pretty interesting, really. So let's shift gears a little bit. So we've talked about, space tech, the history of it, and use cases. One thing I've been quite interested about. So you mentioned about the fund structure style, what works, VC, evergreen right now is another sort of strategy you guys are going for. A lot of the sort of foundational technologies, GPS, even early internet, basically, were sort of like government-funded R&D. It was, and specifically R&D, where R&D doesn't really work out for a long time. It might have a germination period of a couple of decades. Basically, you got to put in a lot of money. That's why you need a player like the government sort of come in and subsidize that R&D. You see that in pharma, you see that in other industries as well. Do you think there is still a kind of place for these publicly or government-funded R&D specifically within space tech still, or do you think that's we don't?
Yeah, no, it's a very important part of the the funding for these space companies. So I talked about space stations earlier and how the International Space Station is coming to the end of its life at the end of the decade.
Yeah.
And the governments that funded the hundreds of billions that was required to build that, they're now looking to the commercial market to build the next generation. So what they do is they provide R&D grants that encourage private businesses to take those grants and then to run those operations, and then effectively the customer becomes the government. So it's a really smart way of government better using their tax dollars. So it doesn't make sense for them to own space infrastructure. Why should they own the International Space Station? Why should they even own weather satellites or telecommunication satellites? It's more efficient if the private sector owns them and they are just a customer. So the way that this R&D is used by government is to encourage private sector to do things that the government want them to do. And it's working really well. And one of the areas that's embraced this more recently is the defense market. So, the defense globally has been under budgeted for decades. And because of the environment that we're in now with the terrible geopolitics that we're living through, these governments around the world are suddenly having to catch up on their investment in their defense capability. And what they've really recognized is that it doesn't really matter how much money they put into their own R&D efforts, that the private sector has got many multiples more. So, and because of the pace of technology development, if they're using their R&D for their own capability, they're underfunded and they're out of date relative to the commercial market before they've even started to use the product. So what we've seen and is accelerating now, really over the last 5 years, but really is accelerating now, is government as a customer, and they're heavily using R&D to get industry, commercial industry, to sort of do the things that they're looking for, but they're quite happy to buy it as a service, or as a SaaS-based data stream, or however it might be. So that is a significant change. I believe that we're going to see other parts of other governments procuring capabilities in new ways, following this kind of trend. So yeah, R&D is a really, really important component of the space market, and will continue to be so for the foreseeable future.
Yeah, that makes sense, really. And just on your point on the geopolitics, and that was kind of my slightly follow-on question as well. But it does seem to me that we're at a place where geopolitically it's a very tense landscape, shall we say, compared to the 20th century. After the fall of the Soviet Union, it felt like Pax Americana, it was generally, one unipolar sort of world. Now it's sort of multipolar polarity, right? Coming about, and different folks. I think NATO, Britain itself, is trying to put up 2.5% of GDP towards defense, right? So it does feel like a very interesting moment where the need for defense spending is so high, and space tech is just going to be the beneficiary of it, for the foreseeable future.
Yeah. Right? I mean, that sadly is the case. But to sort of put it into a space context, there's been great collaboration internationally in space throughout the Cold War. And it continues to today. So this quarter, after a 2-year break, we saw an American astronaut alongside a Russian astronaut being launched into space on a Russian rocket to the International Space Station. So that happened during the course of this quarter. You've got
Okay.
something that's
Interesting.
called the Artemis Accords, which is a NASA-led initiative where they are trying to coordinate the way that different countries behave and act responsibly in relation to the moon. So far, they've got 39 countries signed up with that. So space is, and then the other thing from space is around the ITU, around how you use spectrum around the world for communications. This has been coordinated for the last 30 or 40 years. It internationally works really well. All of the countries are sort of aligned and agreed with it. So space is actually a great sector that demonstrates that there is collaboration globally, even when down on the ground there is still considerable tension. But you're absolutely right that the changes in geopolitics and how that's led to an increase in defence budgets has started to bring significant sums of money to this market. So, for example, private equity are now really focused on space. During the course of the last 12 months, we've seen huge brand name private equity funds coming into space, making their first investments in the new space market. We've seen sovereign wealth funds coming into the market for the first time. So individual nation states are sort of acting through their sovereign wealth funds, not only to procure capability, but also to invest into those companies at the same time. So this is one of the sort of big pools of funding that are increasingly coming into the space market, which is good news from our perspective, because the types of companies we're invested into typically take sort of $300 to $400 million to reach cash flow break even.
That makes sense, really. I was just seeing the statistics the other day. I'm not sure if this is true, but is it true that U.S. and China still hold 75% in terms of share of space tech investments?
Yes, it is correct. It's changing over time, and really with Europe and the rest of Asia growing very quickly.
It's catching up.
Europe during the course of the last 5 years has really doubled down on building its own space-based capability, and they've put lots of measures in place that are really now starting to really come through. So Europe is a really interesting growth market. But predominantly, it remains US and China, where most of the fund activity and the new companies that are being spawned are really being generated from.
Yeah, that makes sense, really. And where is Britain in all of this, basically? Is it actively participating? Are there companies, that are based out of the UK that you're saying, space tech?
Yeah,
or like
yeah. It might surprise you to find out that in terms of the number of space companies per year accessing funding, the UK is third behind the US and China, and fourth is like very, very significantly below, and is typically one of the leading European countries like France or Germany, but it kind of switches around. Fourth place.
I see.
UK consistently in third place for most of the last decade, and I don't see that changing over time. We're a global investor, so we're investing based on the market that we want to invest into, finding the best team we can that have got the most traction with their technology. So we're not led by geography at all, but it just kind of works out that about a third of each of our accelerator program, a third of our venture fund, a third of our growth fund are in UK companies, and that's not because we're based in the UK. Because they're being selected from our sort of global point of view.
Yeah, that makes sense, really. That's good to hear. I think I was also reading, in general, the number of unicorns by country, and I think the UK might be fourth, I believe,
Yeah.
after US, China, and India. I think, yeah, India just recently took over the UK. But despite of Brexit, despite of the, doom and gloom that we see
Yeah.
on the
Well,
on stuff,
outside
yeah,
of the sort of East Coast and West Coast US,
yeah,
UK is sort of the third biggest pool of venture capital funding in
yeah,
the world. So,
yeah,
many of the sort of European entrepreneurs that are setting up businesses will establish UK companies and access UK funding from that pool of funding. So this is why it's not really any surprise that where the UK sort of sits in terms of the generation of unicorns. It's exciting about India being really taking off now. We're really excited
yeah.
about India as a market. They've got a
Oh, yeah,
space
some
heritage.
companies you're seeing there as well?
Yeah, there's some really super interesting companies. It's a really entrepreneurial workforce. They've got a big space heritage. They're really sort of geared up for venture. A lot of venture funding there. They've got the attitude towards risk. So all of these sort of measures are in place that we see that there's going to be some great companies coming out of India. We've backed a company called Pixel, Pixxell, and they've gone on to really great things. I think that's probably the highest profile space company in India now. They're another satellite constellation, and they use hyperspectral sensors, and that allows you to be able to understand the sort of chemical composition of anything from space. So you can look down at a tree and you can understand the health of the tree, the type of the tree,
Wow.
what nutrition it's got, how healthy the leaves are, look under the tree's canopy and identify the soil, the moisture of the soil. So all of these things are capable from space, and Pixel is really demonstrated leadership in that market. A really exciting team that have been developed there, and we spotted that one in its seed round. This is one of the things that we've really demonstrated our capability of doing year after year, is being able to identify companies that become the leader within a particular field, but do that early. And maybe we help it along its way, because when we participate in a round, because of our specialist nature, we provide confidence to the other investors who are coming in on the round. So we kind of make rounds happen, if that makes sense. But it's really exciting to be involved with these companies that scale very quickly. And Pixel is a great example of that.
Yeah, yeah. Again, some very foundational technological moments there, which is going to be so amazing. So, Mark, I want to finish off with a topic that I think a lot of our listeners, kind of have at the back of their mind. Obviously, the media always talks about this, which is space and sustainability, really, and environment. So we all want a healthier and resilient planet, right? And I think when you talk about space tech, space investments, and a lot of hard tech, something like a Dune comes to mind. I don't know if you've seen the movie Dune, where basically they're extracting, going to different planets and extracting lots of resources. And there's this kind of idea that humans are just greedy folks destroying nature in every single planet we go to. So do you think, firstly, do you think that's a fair representation of the future? Or do you think that space tech can actively create a healthier and resilient planet? And so what's your take, basically?
I love these films. But I believe that space is a capability for good. I've given some examples already during our discussion today. For example, eliminating illegal fishing. That's something that's just going to happen. But we're now able to monitor our planet in a more efficient way, and understanding how the planet's working, and who on the planet is responsible for emissions. We're knowing and being able to measure it fairly and effectively means that you can then use that data to affect change. Gathering this information allows you to be able to use resources more efficiently, like I mentioned. And talked about and used the example of sort of farming and using water more efficiently. Typically water's just put across an entire field, where actually all you really need to do is you need to water the parts of the field that require watering. You use 10% of the water, and yet the crops are healthier because they're not overwatered. You've not washed off the pesticide that then goes into the soil and ruins the ecology. So being more effective with the resources that we're using and using the data to enable that is something that we've talked about. And then we've talked about being able to catch the bad actors, those that are chopping down rainforests, dumping effluent into rivers, fly tipping, all of these sorts of things that are going on every day of the week. They're going to be limited because of the data sets that are available. That's where we are today, and all of this is going to happen over the next few years. As we then sort of start lifting up into space and providing infrastructure, we start to be able to do much bigger things. And again, I've mentioned this already, lifting dirty industries from planet Earth and taking them into space so that we're not polluting our precious planet. This is just a matter of economics. Does the economics work to actually rebuild that power plant in space rather than it being, cool. On our planet? And then the extrapolation of that is around solar farms in space. So this is one of the areas that we've already started to invest into. There are 5 companies around the world, all at seed stage right now, that are looking at putting up infrastructure into space where they use effectively solar power, but we bring that solar power back to Earth so that we've got a reliable source of energy that comes directly from the sun that makes us less reliant on using the resources that we dig up from under the ground. Now, this is happening right now. And I believe it's going to be one of the biggest things that space is going to do for our planet. So, there is no doubt going to be profiteering from digging up resources and grabbing asteroids and swamping the market for precious goods. But I think that is quite some time away. I think what I've just described there are the things that are going to be happening over the course of the next few years that on balance are very much for the power of good for the planet, helping humanity and making it a safer place for us to live in. That's the thing that gets myself and the team out of bed each day. The dual use nature of the technologies we're investing into, defense, helping us live on a safer planet, and then climate and sustainability, ensuring that the children's children can breathe the air, drink the water, and I think that the kinds of companies that we're invested into at the moment and the ones that we'll invest into over the next few years are really going to have a big part to play in addressing some of the big challenges that we face.
That's amazing. And on that positive note, we'll end it there. It's been a great conversation, Mark. Thanks a lot for being in the podcast, and all the best with your new fund, basically. Hopefully you get some big hits.
Thank you, Wahid. Yeah, I'm confident that we will do. So enjoyed speaking to you today. Goodbye.
Yeah, brilliant. Thank you.